Welcome to our podcast on mastering dental accounting and profitability, your favorite 2025 dental playbook for financial success. So, most dentists graduate dental school without ever taking a single accounting course. Yet, as business owners, they just manage the financial health of their practice just as carefully as patient care. Now, accounting missteps without whether choosing the wrong accounting method, hiring an ill fitting accountant, or navigating complex insurance reimbursements, or making costly equipment investments can really make or break a growing practice. So, even minor bookkeeping errors can snowball into some serious financial crisis. So, today we're diving into the most common accounting pitfalls that dental practices face and the strategies top performing practices use to stay financially strong across USA. My name is Simran, and my company, Confido Health, an AI powered automation company streamlining dental and healthcare admin tasks with 24/7 multilingual voice AI. And joining me are Nishant Pandit from Built Easy, a dental practice management expert firm, and Harsh from Remedo, a dental marketing expert. And we're thrilled to welcome Stephen Nance, a CPA and Vice President at Drill Down Solutions, a dental specific accounting firm serving over 100 small to mid sized practices across the United States. Stephen will share key financial mistakes he has seen in the industry and what the more successful practices are doing differently. So, Stephen, thanks for joining us. Could you start by sharing a bit about your background and what led you to specialize as a CPA and tax specialist specifically in the dental industry in the US?
Yeah, and first of all, thank you for having me on your podcast. It's good to be with you, Simran and Harsh and Nishant. So my background, how I first became a CPA was a little bit by accident or not fully on purpose. What I was originally planning for my career was to go to law school. And I was planning on that, and I saw accounting as a way into law school. And my dad was an accountant, so I had some exposure there, but I kind of saw it as a backup plan. Most people going into law school will major in political science or English, and I wanted to stand out. And so I majored in accounting, and then I got married. And my wife and I talked because I was graduating, and it was time to decide, okay, do we make the move to law school, or do I get a master's in accounting and go the CPA route? And we wanted to start a family. We have 4 kids, and we decided, law school is going to be 3 years plus a much bigger financial commitment. I could knock the master's of accounting out in a year and then another year getting my CPA. And we decided to go that route. And honestly, it's been a very good decision to work as a CPA. How I got into dental. So I joined this firm about 11 years ago. And I came from the Utah State Tax Commission. I was an auditor. So I was on the compliance side, and I started working with various small business. We work with dental and other businesses. And at that time, we weren't focused specifically on the dental. So, but we did have a fair amount of dental clients I worked with. And one thing I noticed from the get-go is dentists have the opportunity to make a lot of money and have a really great work-life balance. And of all the other industries that I had worked with, I don't know of another profession that can have such a great balance between the two. But then I also realized over some time that the amount of debt that dentists have is it causes a lot of problems and can make life very stressful. And a lot of times the income that you see on paper is not what they're actually living off of, like you and me, because they've got tons of debt coming out of school. Then they have practice acquisition debt and equipment debt, and the normal debt that we all have for our cars and our homes. And that can make things very stressful. And it's not as easy to make a good living and have a good work-life balance as it is or as it seems. So dentistry has some really cool opportunities that are unique, but also some really unique challenges. And so
Wow,
that's
that's
how I
very
got. Sorry, were you going to say something, Harsh?
no, please go.
That's how I first started with dentistry. But then, as we had a lot of dental clients, and when I first started, the founders of our firm had already created this spin-off company that initially started as a dental consulting company, and then evolved into some analytics and dashboards, and that became Dental Intelligence. So Dental Intelligence was born from our firm, and I was working alongside them when it first started. Then they spun off. A few years later, we were still doing our general CPA thing, and we got involved with an accounting consulting group, and we realized we needed a niche, and dental was the natural fit. And I had already liked working with dentists, and it's been really great to go all in the dental world and keep learning. There's so much to keep learning. So it's a fun industry to be in.
Wow,
Awesome.
that's so interesting. Stephen, so basically we get the background. Can for the viewers who are listening to it, whether they could be new dentists, they could be people who are already running their practices. Um, what would be interesting for them to know is what all does a CPA really does when they go inside, let's say, a dental practice, when you're consulting a dental practice. What are the things that you would look at, and what are the pieces that you would be helping them with?
Yep, great question. So first of all, on the bookkeeping side, what we do is, and every bookkeeper will provide a monthly balance sheet and profit and loss statement. But what we also do, since we focus on dental, is we provide a benchmark report as part of those monthly financial statements. It looks at your hygiene, your other payroll, and supplies and marketing, and looks at your EBITDA. That's the hot topic that people just want to have eyes on. And it makes the financial statements useful, so you can manage your practice and know where you're at. As far as what stands out from the successful dental practices, they watch the numbers, and having clear eyes on it is very helpful. So that's what we do on the bookkeeping side. And then on the tax planning side, we typically a couple times a year throughout the year, we will proactively schedule meetings, sit down with our clients, and look at, here's your income year to date, here's where you're trending, and based off of our projection, this is how much tax you're going to owe, and talk through those to make sure we're looking at the right numbers. And then from there, we customize strategies to ultimately help put our clients in the best financial position possible. There's a lot of different tax strategies out there. Not all of them are good, but there are a lot of them that just people don't know about. And it really takes getting into the numbers and looking at where you're at to see what kind of solutions are a possibility for you. It's not necessarily, tax planning is not necessarily a one size fits all. There are different solutions for different types of things and different risk appetites and things like that. So it's a very personal service, and people have different takeaways. The biggest thing is knowing ahead of time, what to expect and avoiding surprises.
I have two following questions based on what you just mentioned because that was really helpful. You mentioned bookkeeping. So I'm sure like people know that term and they know that okay, an accountant maintains P&L. But according to you, for a specific to dental practice, what does an accurate bookkeeping method looks like? Because there's also I was reading up around like accounting in dental. They do suggest, at least research that I did suggested, that accrual is better than cash accounting. So could you kind of enhance a bit just so the viewers can understand what that is.
Yeah, that's a great topic to talk about. So what accrual is versus cash accounting is cash accounting, money comes in, it's income. Money goes out, it's an expense. Pretty simple. Accrual is when you've got production, even if you haven't gotten paid on that production, it's income already. And so you book that income and you book your accounts receivable. And same thing on the going out side of things. You've got expenses that you haven't necessarily paid yet, but you've incurred those expenses. You book the accounts payable, you book the expense. So accrual does give a more accurate overall picture of what's going on in the practice. However, for tax purposes, most people want to be on cash because most people don't want to pay taxes on income they haven't received yet. So cash is typically what we use for our tax planning. Plus, from a bookkeeping side of things, cash is pretty standard for a smaller outfit, a one or two or even 5 or 10 dental practices. Once you get into a big DSO group, then maybe accrual is a better use. And once you get to 25 million of gross revenue, then the IRS requires accrual. But for the most part, cash is pretty standard, even though it doesn't tell you everything. It's better for taxes and just simpler and for most dental practices, I don't think you need to go beyond that.
Right. That's a great answer. And, generally, the famous term what CPAs use is like cash is king. So that pretty much answers the question. But yeah,
there you go.
Also, I have a follow-up question to that. Does it I've heard stories from like dentists. What is a good time to be working with the CPA? A lot of times, what has happened with our clients is that, okay, now I have already opened up an office, I need a CPA, or I have a problem, I need a CPA.
Yep.
I have payroll problems, I need a CPA. But what I've seen with some of our dental clients is that the ones who've used a CPA even before acquiring an office, they have benefited a lot. But what do you think? What makes sense? When should dentists should start looking for a CPA?
Yeah, and I have heard people say to me that they would tell people starting up a business to get a good CPA right at the beginning. Now I mean, definitely when you're in dental school, you know you're somewhat cash poor,
Right.
and so of course you got to watch your expenses. I'm an accountant, so I I do the same thing. But when you're going into starting a business, you want to the more you can have done or prepared for in advance, you're going to be better off. So if you know kind of who your players are going to be, what accountants you want to work with, what your financial advisor might look like, have your team, your dental attorneys and things like that, or attorney. You don't need multiple attorneys, but and
Hopefully
also
not.
yeah, one is enough. And know how you want to structure your business, know why you want to structure it a certain way. Having talked to those people before, we can advise you on how best to structure that. And also how you want to operate your business. Because you're in dental school, you're learning clinical and you're getting good skills. But they don't teach you how to run a business. So you've got to start talking to people and having a game plan. Because once you are ready to buy or start a dental practice, there's just so many other things that you've got to be busy doing. Going and running and grabbing all these people and figuring out your game plan just adds to the stress. So the more you can do ahead of time, the better. I'll tell you an example too. In 2019, 6 years ago, we started working with an established pediatric dentist, still a great client of ours. We implemented some strategies that year that saved him about $150,000 in taxes. And not only that, when that saved him $150,000 in taxes, that reduced the required quarterly estimates he had to pay for the next year by about 150,000. So if you think about how that benefit compounds, even if he didn't do any strategies the next year, he had a year longer with his money to do whatever he wanted with it. And he ended up doing more tax strategies, and that compounded and built his wealth, and he's done similar strategies ever since then. And he was already a successful pediatric dentist. And I don't think his accounting firm that he was working with before did anything wrong by any means. But we exposed him to just some strategies he wasn't aware of before. And for all those years, had he been doing similar strategies, the multiple effect of that compounding savings ends up having a huge impact on someone's overall wealth.
Right.
So what are the key financial metrics that essentially you would want, let's say, a dental practice to look at? Or what are the things that you would want to say that these are the top three metrics or five metrics that I would look at if I am a dentist and I'm looking at the practice's overall health?
Yeah, great question. So one, what I would probably say cash flow and net income, and knowing the difference between the two. Oftentimes we see net income positive and cash flow either less than net income or in the negative sometimes. And cash flow, to Nishant's point, cash is king. So you got to know where your money is going. And knowing the difference, how much your debt is costing you, how much your distributions you're paying yourself are costing you. And so understanding that is one. Payroll is huge, your hygiene or staff payroll, just understanding that metric, and it should be below 30%. People have struggled with that since COVID. But that's, ideally 25%. But watching the payroll, because that could certainly get out of hand, and not just watching it from a reducing it as much as possible point, but also kind of understanding how your team is feeling. So that goes beyond the metric a little bit. And sorry for tangenting a little bit, but just having a sense and a feel for your overall practice culture and how happy your team members are. And it takes more to keep them happy nowadays than it did 10 years ago. So keeping them happy, and some of that is with pay, some of that might be with benefits, but some of that is just how much you show that you care about them, right? And having a personal relationship with your team. And then watching your top line, revenue or collections or production, both, but collections obviously is what actually hits your account. So watching that, but the difference between collection and production, but also just making sure that it's growing.
Yeah.
And that's what I would probably say is some basic metrics to start with.
So that actually brings to an interesting point. So when you were giving these numbers, right? So I felt that there are some benchmarking that you've already done across the industry in terms of how should the overall structure really look like, right? So what should be the percentage of payroll? What should be the percentage of probably the other overheads? Can you just give us like some indicators on how successful practices matrix looks like on some of these numbers in terms of, again, percentages, and then let's say what you would suggest for what could practices do in order to match this number and bring their practice up to that level?
Yeah. So a successful practice keeps all their payroll at 25% or below. We're talking ideal, and runs a profitability at 50% or higher. So that means their overall overhead are 50% or less. That's a really good practice. And I've seen some that are 60% profitability or higher. That's not necessarily common, but that's a really good practice. But I've seen practices that are, nowhere close to that. I think probably more averages, profitability is probably closer to 30 or 40%. And so that means their overhead is, 60 to 70%. And that's probably a pretty normal practice. And again, I've seen some that are losing money. So it's hard to take these industry norms and say that that's
Right.
what your practice should do. What I would say is monitor your improvements from month to month and from year to year, and keep goals and keep focused and drill down, no pun intended, drill down to see what the issues are. And you can use a coach, or you can use something like Dental Intel or analytics to see what the issues are when you've got a benchmark that is out of whack, and just make sure you're monitoring for improvement on a regular basis.
Yeah, you mentioned staffing, which is very interesting because I did have a question on that. So on a personal note, like, of course, we also work on kind of, reducing that kind of the staffing issue that is such a prevalent, challenge in the dental industry today. There's, either shortage or there's burnout. And, our research has shown that staffing inefficiencies and unnecessary manual tasks can significantly impact a practice's revenue cycle. So, from an accounting perspective, have you observed some similar trends? Like, do these challenges show up in the financials as you analyze as well?
Yeah, definitely. You look at practices that you look and see they're not making very much money. Where is it all going? And usually it's payroll. That's just such a big one that just gets out of hand, and it's a very tough one to manage because you need your people to bring in the revenue, but you've got to manage it appropriately, and those percentages should provide that roadmap, because if you're not profitable on your hygiene, or your associate, what's the financial benefit of having that, right? So monitoring those or looking at those benchmark percentages is a good way to monitor and start looking at what those issues are. But sometimes you got to make some difficult decisions as a business owner.
Sorry.
We've had to let people go in our accounting firm before, and it's tough to do, especially when they're not obstinate, terrible employees, but they're just not keeping up with what you need for your business to be successful. And at the end of the day, you've got to remember that you're running a business, and some people are just too nice, and not that you shouldn't be nice, but you've just got to monitor the numbers and make sure that you're doing what you're doing intentionally.
Is there like an ROI metrics or something that, there's like an investment in this amount, like in the payroll, then this amount of, patient volume you should be getting in terms of income to actually offset, like to show that profit?
Oh, that's a good question. I mean, payroll should be around 30%. But I mean, there's different divisions of that, and we show hygiene and associate doctor staff wages, but it also takes time depending on what metric you're looking at. Certainly with an associate, it takes a while before you see profitability from an associate. And same thing with hygiene.
Right.
And it's tough to measure, the profitability of your staff wages. But again, looking at the percentages and things kind of come into play there. But another thing is just making sure that, you know, if you hire an associate, making sure that you're hiring an associate at the right time. Because if you're just going off of some arbitrary reason for bringing on an associate because you want to, because it's you've hit a certain collections number or something like that, you really do need to look at things like what's your schedule look like, and how fast are you booking appointments, and how much is your schedule filling up to where you could bring an associate on and not lose money by taking from patients that you're already serving, but to bring on new clients. And so looking at that helps you be able to monitor those types of investments.
Great point. I
So,
mean, right, when we were like when we talk to our clients, right? I mean, that's what we talk about, right? There are two different sets of clients. One who is talking about profitability, the other one who is talking about revenue. I mean, both those answers are correct, the way you want to look at it. But with that being said, there's a very popular term. I mean, not popular for you, it's very common for you, but a very popular term in dentistry, which is going around since like last 4 or 5 years, where everyone is talking about EBITDA, right?
Mm-hmm.
Now everyone has their own definitions. Oh, it's earnings before interest and amortization, everything. If you can just give a basic understanding to our viewers, like what is EBITDA? Because everyone, when they hear this term, they're like, oh, DSOs are tracking what their EBITDA is because they want to sell it at whatever multiple, right? But like, if you can just explain what that EBITDA is, and should they be looking at it from the first practice itself?
Yeah, great question. So simply put, EBITDA is, like you said, it's earnings before interest, taxes, depreciation, and amortization. So if you look at a profit and loss statement, bottom line is your net income. So that's all your revenue minus all your expenses.
Mm-hmm.
And if you start with the net income, you add back your interest expenses, your tax expense, if you have any. Most dental practices in the US are either taxed as an S corporation or a pass-through entity where they're not paying income tax at the entity level.
Right.
Unless there's some state taxes. Then you add those back, and you also add the depreciation and amortization, and that's your EBITDA. And the reason that's put there is as a metric is that gives a reflection of how much you earned that's actual more stable income. Depreciation and amortization are not cash expenses for one, and they may change from year to year if you're taking Section 179 and things like that.
Right.
That is EBITDA. And now most DSO buyers are going to modify that EBITDA number slightly, and they're going to have other add backs that you mentioned. They're going to adjust how much you're deducting for your officer wage. You know, if you're not paying yourself a high enough wage, they're going to reduce your EBITDA for what they would have to pay someone else to fill your job, or pay you if you're going to step into the shoes as an associate. And they're also going to take out things like your auto expenses. If you have a business vehicle that you choose to have in the business, you don't have to have a business vehicle. A lot of times you do that for tax reasons or things like that. Or you're choosing some CE courses that maybe are more extravagant than you would, things that are more your choice. Those things that they add those back, and so that might increase your EBITDA number or add to it. So those are kind of the things that they look at, but yeah, you should understand your EBITDA, because that's what most valuations are based off of now with a DSO transaction.
sorry. Yeah. So a follow-up question on that would be, uh, do you see a trend that successful practices are investing in certain kind of uh, things, right? For example, where it could be uh, instruments, it could be marketing, it could be certain kinds of trainings. So do you see a trend across successful practices on what kind of investments they are making in the practice?
Yeah, that's a good question too. And what I would say to all of it is strategic investments, right? So there you see some practices that throw money at marketing, and they think, well, I'm spending money on marketing, it should bring me new patients, and that may or may not be the case. The key is being strategic about it, and you could speak to that better than I could, Harsh. But same thing with equipment. And I have clients that when we do tax planning and before we get into strategies and such, we'll do the projection and show them this is what you're trending toward having to owe next year. And there are some clients that say, okay, well, I'll just buy a bunch of equipment and we'll work that down. And you can do that. Equipment is a tax strategy, but you never want to buy equipment and spend $1 to save 30 cents or 40 cents or whatever your tax bracket is. That makes 0 sense, right? Don't let the tax tail wag the dog, right? And so that's not strategic, but successful practices do upgrade their equipment, and they have the latest and greatest that they can have useful implementation for. So they buy it when they are ready to use it and to be successful with it. They're not buying a bunch of equipment just to save on taxes, but they're strategic about those upgrades. You know, if it's a milling machine, you know, how many crowns are you doing? How much use do you have for that milling machine? How much more collection revenue is that going to add to your top line versus the cost? If you're just trying it out, that's not very strategic, and things like that. So just being strategic with your investments is what I would say is key.
So, since you mentioned investments, let's say there's a dental practice that's, doing average. But I think, was looking into the research, and like one of the very key trends that we're seeing in the industry today is smaller practice kind of selling it to a large DSO or a private equity firm, backed, group practices or something like that. So on a financial point of view, like when should they do that?
When to sell to a DSO or when to sell, period?
Yeah.
Okay, so this is a great topic, and it's from a financial perspective, it's usually, well, DSOs are all over the place, right? We see some DSOs that just were not managed well. They were over leveraged, buying too many practices, and now they're in financial trouble. If you're looking at a DSO transaction, it really depends on who you go with and how confident you are in their success, because ultimately you're partnering with them. From a financial standpoint, understand before you sell to a DSO that you're giving up the profits of your practice, and that's why they're buying you. That's why they're willing to throw money at you, is they want your profits. So you're giving that up in exchange for money now. So if you're selling at age 40, you're giving up the profits that you're earning for the rest of your career. And that doesn't mean that you shouldn't do it, but just understand that. And then depending on who you go with in a DSO transaction, typically there's the cash up front, and there's some form of equity that you're going to get, some type of partnership either in your practice or in the DSO as a whole. And that part is the biggest unknown, because typically you're not able to see the financial data that goes into their valuation of their equity. And so you have to do some outside homework and talk to people to know how good you feel. And the people that are turning dentists down, that's a good sign. And the people that are offering the biggest cash up front, that could be a bad sign, because that just shows that they're in it more to buy your profits, and a lot of times they're just they can over leverage themselves with that cash up front and put themselves in bigger financial trouble. And then there's some type of holdback or earn out, and that, I mean, that's another part of it. But the biggest unknown is the equity. But the other thing you need to evaluate, so one is, if you sell too early, you know that you're giving up the profits for the rest of your career in your practice. So if you consider a DSO that's going to offer you, let's just say they're going to offer you, for easy math, let's just say it's 2 million. Now, most DSOs are a lot more than that they're going to throw at you. But let's say you could sell it in a private sale for $1 million. And again, just easy math. These are not real numbers. If you work for 5 more years and then sell to a private seller and then walk away, you get your $1 million, plus you get your profits over those 5 years, whatever they are. If they're $500,000 a year, you've made, in the course of 5 years, you've earned $2.5 million plus your $1 million. That's $3.5 million that you got from the deal. If you sell to the DSO and you get your $2 million now, you're giving up that $500,000 now. You'll probably get wages as you work back for the DSO for 5 more years, but you're not going to make nearly as much in wages as you do in profits. So a lot of times, if you wait it out and sell in a private transaction, you can make more money than you can in a DSO, or at least have a clearer picture of what you're getting. Because then you're keeping the profits for that time, and then you're just selling it for cash and walking away. The DSO, you really just need to know who you're going into business with, and understand that you're giving up your profits.
I'm gonna flip the question a bit. This was very, very helpful. But let's say a viewer is a DSO. For them, what kind of private practice would make sense for them to acquire? Like, what would be a good candidate for them financially?
Well, DSOs typically know what they want to acquire, and they typically have a pretty dialed in picture of what they want. Most DSOs don't want to look at you if you're under $1 million in collections. And a lot of them, they're looking for 2 million and above, from what I understand. And so that's one. And then EBITDA, I mean, and the profitability percentage, they're going to be looking at that too. If you're running at 20% profitability, that's probably not going to look so good. But if you're running at 50%, 60%, you're going to have DSOs that are going to be interested. You're going to have options for who you can sell to.
Right. With that being said, I mean, that was a great answer. And to that, I mean, a lot of DSOs, not only DSOs, but there are private offices who decide, okay, my third and fourth location, I'm just going to start a location and run it for like 3 years, and I'm going to sell it. But they do ask this question that, okay, what is the best business structure for my dental practice? Is there an answer? Is it a C corp? Is it an S corp? Is it an LLC? Right? Because they have decided, and there are dentists who decide that, okay, I just want to run this location for 3 years or 4 years. I want to make 2 million out of it, right? And then I want to sell it, right? But do you have, like, is that a valid question? That is there a best structure like which dentists can use?
Yeah, and I have to caveat that I'm advising from a tax standpoint, not from a legal standpoint. They're two different things. An attorney can better advise on the overall legal structure and the risk protection from a legal perspective. But from a tax perspective, generally S Corp is the best. But it can depend, and a lot of people don't fully understand what an S Corp is. An S Corp is an election that's made with the IRS on how you're taxed. There's no legal structure that's an S Corp. It's only a tax election. So you can be an LLC, you can be a corp. However you're structured, you can elect to be taxed as an S corporation with the IRS. So that's one key point. It doesn't change your state legal registration to elect to be taxed as an S corp. So a lot of people do LLCs and then elect to be taxed as an S corp. Now in states like California, a dental practice can't be an LLC. It's got to be a corp. So things like that. But generally S corp is the best structure from a tax perspective. And the reason why is if you're an LLC that's not an S corp, let's say you're just single owner, that would be the simplest because the LLC would not have to file a separate tax return. It just reports everything on your personal tax return. But the problem is you get hit with self-employment tax. And that's an extra 15.3% on the first about 170,000 of profit. Then after that, it's still another 2.9, and then it goes up to 3.8% after 250,000. So that's just additional taxes on top of your income taxes.
Mm-hmm.
So and then a C corp it's a flat 21% tax bracket for federal income taxes. So that's nice. But the problem with a C corp is when you take distributions from it, you pay tax on that money again. So it's double taxed. So you don't want to pay taxes twice. S corp is really the best of both worlds. You don't have to pay self-employment tax on S corp profits, and you're not double taxed when you take distributions. The only catch is you've got to pay yourself a reasonable wage. Most people understand this, although not everyone knows, and there's debate, what's a reasonable wage? And we can talk about that, but S corp is the best structure for most dental practices. Now, and sorry for rambling, but if you own real estate, you do not want to have that in your S corp. And that's why most people have a separate LLC. Anything that's in a corp, whether it's an S corp or a C corp, any appreciating asset, if you at any point have to, restructure, move things around, or make something personal use, you move it out of the corp, that becomes a taxable event, even if you don't receive any money. It's treated as if you sold that asset. And that's why you don't want to have real estate in an S corp, because if you have to move it around at any point, it's treated as if you sold that real estate and you've got a taxable gain, even though you didn't actually sell it. So just beware that's the some of the traps and things that you need to be aware of.
So we spoke about what do dentists need to see when they're selling. Let's just reverse that and ask what do they need to look at when they're buying? Start from scratch or buying a practice? How do you decide? And what are the things that they should be looking for?
Yeah, that's a good question too. And I'm going to say that I don't know all the answers with all this, right? But you're looking for good value. What's the potential? And most private dental practices, I think, are going for about 80% of collections, give or take. If you can get a practice for less than that, that looks good. You might be getting a good deal, but you need to understand why it's selling for less. I was talking to someone just today, actually, that is buying a practice for a little over $400,000. Very low price for a dental practice. And but he elaborated why it's going for so low is because payroll is out of control, supplies are out of control, and no one wanted to buy it. He had to come down by over $200,000 on his asking price, which is a significant portion of what he was asking. And so you need to just know what you're buying. And if it's going, you can pay more than 80% for a dental practice. If you've done enough homework to know that you can grow this. And you also need to think about that you're buying it's an investment, it's your livelihood, but it's not just a job that you're buying. You're not just paying X so that you can get X every year, or you get Y every year. You're paying X so that you can make that 2X or 10X or whatever you want to do, but I don't think any business investment is worth it if you can't grow it. And so understanding the potential, what the trend has been, how loyal the patient base is to the doctor, if that doctor is going to leave or the patient's going to walk, what's the patient flow, what's the demographic of the area, is it a growing population area, what's the income trends, is this a up and coming area where people are moving in and they have decent incomes, or is this an area that's suffering from economic just struggles, and not that you can't buy a practice in those areas either, but it's going to look different than the type of practice that you're going to be buying in Beverly Hills versus Detroit, right? Totally different type of demographic, and you're going to, depending on what type of practice you want to run, if you want to have a fee-for-service practice that drives a lot of cosmetic and high dollar services, that's all fee-for-service, then you're not going to want to touch the practice in Detroit. Versus if you like doing the Medicaid work and high volume, then you can look at those types of practices. So anyway, it kind of looks different. So I don't know if I fully answered that question, but it really depends on a lot of different factors.
Fair enough.
So I think all the conversations we had are really, really, relevant when it comes to the things that are like traditionally, should be followed. But one thing I think I want to kind of, kind of start the conversation about is also the future in terms of the trends, right? So since we're all here and we're all somewhere, associated with technology, like, Harsh being like this, marketing guy using AI technology, or us, we are managing appointment management and scheduling with AI technology for staffing issues, or Nishant, who is actually supporting and onboarding that technology to the dental clients. I think in since the webinar, or sorry, the podcast is about the 2025 trends and the playbook. I'm really curious to understand what are the emerging trends and the technological innovations that you are seeing in your dental clients, and how is it separating, like, from the ones who are using it to the ones who are not.
Yeah. Well, I have seen a lot of technology. As I mentioned, I was there for the beginnings of Dental Intel. And so before Dental Intel, I don't think there was a whole lot of the technology. I mean, you had your patient management system. You could print out reports. But the information that is there now, and there's new cloud-based patient management systems that have the analytics that are just popping out all over the place. And all the technology that you guys provide, there's so much. You need to embrace technology, and you need to kind of know what your options are. But yeah, I've seen there's definitely changes coming in technology that I've seen.
Do you think that these changes are impacting the financials too in any way?
Yeah, they are. It's a blessing and a curse, right? So technology has a cost to it, a cost that people didn't have to pay before. And so again, it comes back to being strategic. And so if you have, if you have your patient management system, if you have your website, if you have, your HR function, your and all the technology that you have, if you have a dental intel or some kind of analytics like that, that can be a blessing or a curse. It's gonna have a cost to it, first of all. So it can either just be a cost or it can be an accelerator to drive more income. If you're using that technology strategically, managing all those things and looking at them regularly, you're going to use it to drive better business. So it's either a blessing or a curse. You just got to use it effectively, efficiently, and often.
And great point brought by Simran. I mean, we've been leveraging AI with the help of Confido and Remedo with our clients, and that has been fantastic for our clients. They've been very happy. But when we talk about taxes and all those things, how does Drill Down Solutions approach building relationships and maintaining these relationships with their dental clients? I mean, how is the communication? Like, I mean, I understand during the tracks like season, it's going to be way more, but like, how do you generally communicate? Like, how do you build and maintain relationships with your clients?
Yeah, that's great. Because my business, and same with dental, it's all a personal relationship. So, I mean, we have certain things that are streamlined and automated for during tax season. We're sending out organizers to our clients, and that's a less interactive face-to-face type of communication. But we're sending those out in an efficient way so that we can get the information and get tax returns done. But when it comes to tax planning, like I said, we proactively schedule those meetings with our clients, and we're sitting down face to face, usually over Zoom, and looking at the numbers together. Now we've done a projection for what their taxes are going to be, and we've identified strategies typically before the meeting. But most of the time, everything changes during the meeting as we're talking with our clients, because the client really understands what they're expecting the future to be better than we do. And so we have historical data. They can fill us in with gaps. Well, I'm actually going to be out of town for 2 weeks in December, in the first part of December, or something like that, or that we had this or that, and that's going to impact this. And so we tweak the projection, and then talking through those strategies is very personal. It's not a one size fits all. I have some clients that want to be aggressive. If there's a way to get a tax reduction, they want to do it, even if they know that's going to open them up for risk of IRS audits. And we would never do something that we feel is illegal or dishonest. I'll just make that clear. But then I have other clients that we present these strategies, and then and we let them know that they can save huge amounts of money, and they'll say thanks but no thanks, because there's a chance that they could be audited, and they don't want to take that risk, and that's okay. I don't fault them for wanting to avoid risks. Our goal is to put our clients in the best financial position possible, which may look differently for different people. For some, it's lowering that tax as much as possible. For some, it's avoiding the risk. And that ultimately gives them peace of mind. Financial success is really just a tool to give them whatever else they want. And peace of mind is one of those things that we help with. So it's very personal, and it's not a one size fits all, and it's different for everyone.
And I have one question which is like slightly different than what Nishant was asking, and goes back to the initial point that we were discussing. You said some of the practices which are struggling to thrive, you saw a high, let's say, high percentage of payroll. what are the other functions where you saw that, practices which are struggling apart from payrolls, which are the places where they struggle most with overspending on that?
Yeah. Supplies is another one that can get out of hand. And so just knowing who you're buying from and buying at the right time. You don't want to keep a stockpile of supplies that you don't need until you need them, but at the same time, you don't want to be running out of what you need. So that takes just some good management of that and knowing who you're working with. But honestly, payroll is the biggest thing that drives the practice out of hand in terms of cost.
I'm sure Nishant can help with supplies.
Absolutely.
Yeah.
All right, awesome. That answers my question.
All right. Well, I think, Stephen, all the answers that you gave, really, I think it felt like we were sitting in this in-person private lecture, and all of us learned so much. We've also been in this industry, and of course, even have our own taxes and, accounting to do, and also work with the dentist who often, communicate us about this. But this was so invaluable. I do, want to take the time and ask you this one last question, which is, for all the viewers, what are the last few advices and the most crucial advice you'd like to give to the dentist viewers? And also, since the tax season is on, at the corner, are there any advice related to the taxing and the taxation side of it as well?
Oh, that's some loaded questions there. Last parting advice. I talk a lot about financial related things, taxes or profitability, things like that, which you need to manage your practice and things like that. But be true to yourself. Know what you want. Some people want to grow their dental practices as much as possible and add practices and are very entrepreneurial oriented. And some people are content with their livelihood and their 3-op practice, and that can be okay too. Be true to yourself, but definitely don't lose sight of the financial side of things and do your best to grow it, because if you lose sight of keeping the value of your practice to its potential, it's sad when a dentist gets ready to retire and he's kind of stopped pushing for several years and the value it has diminished over the last few years, and he can't sell it for what he could have had he sold it 5-10 years before. So just be aware of that pitfall, but be true to yourself, what you want out of life, what you want out of your career, and things like that. As far as tax planning, like I said, it's not a one size fits all. If we had more time, that's really a whole topic in of itself, and that's what I do. But and in terms of tax season, now is the tax filing season. Now that the year is over, there's not as much you can do. There are some things you can do. You can contribute to certain retirement funds, and you can contribute to a health savings account. But the biggest takeaway with tax planning is you've got to do it throughout the year. You can't wait till the end of the year to do it. I prefer to have tax planning done for my clients. Now we're tax planning all through December, but preferably before December, the tax plan is dialed in to where we have the roadmap, we know the strategies that we want to do, we've introduced you to all the right players, and there's still some time to act and get it all done before, and then you can settle down for the holidays, for the Christmas season and for New Year's, and have that all behind you. So definitely want to just and to have that done before December, you need to talk before Thanksgiving, right? You've got to have those discussions start. So we prefer to have a couple in-depth discussions during the year, once maybe in the summertime, and then in October or November where we finalize things.
Awesome. That's some golden advice. Specifically the timeline. I'm sure a lot of people are still rushing to finish that. But thank you so much, Stephen, for taking the time to do this podcast with us. As I mentioned before, this was a golden lecture for us as well. Especially all the information regarding opportunities and challenges and how to solve them. Really insightful. And thank you, Harsh and Nishant, as always. Cannot
Thank you.
this podcast, without you guys. And for the viewers, if you'd like to get in touch with us, please, you can feel free to reach out to us. We will also share our contact information in the comments at the link below. And please subscribe to our channel for more such interesting podcasts with really, exceptional experts like Stephen. And stay tuned and take care. Thank you, everyone.